For decades, Nepal has held this incredible ambition of becoming a true energy powerhouse. And for a long time, it looked like its own domestic banks were going to get it there. But now, that financial engine has seized up, and it's put the entire nation's ambition at a really critical crossroads.
So in this analysis, we're going to unpack this whole challenge. We'll kick things off with the paradox that's really at the heart of Nepal's power sector. Then we'll dig into why the old way of funding these projects has completely hit a wall. From there, we'll pivot to this huge global alternative that's waiting. We'll also look at the one crucial key that's missing to unlock it all. And finally, we'll lay out the very stark choice that the nation's leaders are facing right now.
Let's just start with a really blunt reality check. The quote you see here says it all. The time when you could fund big hydropower projects mainly through local bank debt, that era is over. It's done. The old way of building Nepal's future just isn't an option anymore.
Okay, so what exactly is this central paradox that Nepal is dealing with? Well, it's a huge clash, really. A collision between these grand, ambitious goals on one side and a brand new, very harsh financial reality on the other.
You know, for a while, the model was a massive success. Local banks were taking people's savings and plowing them into dams and turbines, building an incredible 2,800 megawatts of clean energy. But that well of money, it's just about run dry. And this is happening right as the country's ambitions are getting bigger and bigger.
All right, let's look at the actual numbers behind this dead end. Because this isn't some temporary glitch, it's a structural problem. We've slammed right into what the source material calls the Great Wall of NPR 5.5 trillion.
So what is this number? Well, that's it. That's the entire pool of money. Every single loan for every single thing, whether it's for a small business or a massive infrastructure project, it all has to come from this finite pot of deposits. This is the absolute ceiling of the entire domestic financial system.
And this slide really breaks down why that ceiling is made of solid concrete. First up, the CD ratio ceiling. This is just a rule about how much of their deposits banks are allowed to lend out, and guess what? They're already at the limit. There's basically no dry powder left for new loans. Second, the sectoral lending limit. A rule that was meant to encourage lending to the energy sector is now a hard stop because that limit's been hit too. Third, the single obligor limit. This is a critical risk management rule that stops any single bank from betting too much on one project. The side effect? No single bank can fund a truly massive dam by itself. And finally, the really big one, the most fundamental issue, asset-liability mismatch. You're using people's short-term savings to fund projects that take 30 years to pay off. That's a recipe for enormous risk across the entire system.
So the crucial takeaway here is this. We're not talking about a pothole that you can just patch over and keep driving. This is the end of the road for the old financing model. The system has officially reached its structural and regulatory limits. Period.
But okay, if the domestic well has completely run dry, what if there's a vast, untapped ocean of capital just waiting? Let's talk about this global green alternative and the totally new path that it could open up.
Now, what's really wild is when you look at the sheer scale of the difference here. The entire pool of all domestic energy loans in Nepal, it's a tiny sliver compared to the global green bond market, which was worth over $800 billion in just 1 year. Honestly, it's like comparing a puddle to an ocean.
And the main vehicle to tap into this ocean is something called a green bond. It's actually a pretty simple idea. It's just a loan. But instead of getting it from one bank, you're getting it from thousands of global investors. And the one big rule is that the money has to be used for environmentally friendly projects. Hydropower, it's a perfect fit.
This chart just lays out the advantages so clearly. Instead of dealing with high-interest, short-term loans in local currency from a small group of banks, green bonds give you access to lower-interest, long-term financing in US dollars from a massive global market. And maybe the most important part is the loan's life cycle actually matches the project's life cycle. It's just a more stable, more affordable, and way more scalable way to get things done.
So the money is definitely out there, and the right financial tool exists. But there's one critical piece of this puzzle that's missing. You see, to get into this global market, Nepal needs a passport.
And that brings us to the most logical question, right? If this is such a fantastic solution, what's the holdup? Why can't a company or the government in Nepal just go out and issue one of these bonds tomorrow?
The answer is the lack of something called a sovereign credit rating. The source material has a perfect metaphor for this. Think of it as a financial passport. It's not a report card, it's not a grade on how well the country is doing. It is simply a standardized language that tells a pension fund in California or an insurance company in London how to measure and price the risk of lending money to Nepal. Without it, to them, The risk is basically infinite.
Now, there's often this fear of getting a low rating, but that's kind of missing the whole point. Any rating, even if it's a speculative one like a B+, gives you a benchmark. It turns an unknown risk into a known one. It gives investors a starting point to have a conversation, which is infinitely better than the total silence that exists right now.
And once you have that passport, it acts like a master key. It allows global money to start flowing in. First, it would probably go to the government or state-owned companies, and that sets a benchmark, a price for risk, that the private sector can then use to get its own funding. It unlocks all the other doors to the global financial system.
So all of this really brings us to the final conclusion. Nepal is standing at a very clear fork in the road, and the choice that's made right now is going to define its economic future for decades to come.
And the two paths couldn't be more different. Scenario A is just inaction, staying the course. In that world, Nepal remains a prisoner of its own limited domestic capital. That means hydropower goals stall out and big ambitions just kind of evaporate. Scenario B, on the other hand, is global integration. By unlocking this global capital, Nepal can finally start financing its megaprojects. It can become a real regional energy hub, which means exporting power, bringing in revenue, creating jobs, and turning that 5,000 megawatt dream from a slogan into actual steel and concrete.
And here's the kicker. The biggest thing standing in the way isn't some complex economic formula or a technical challenge. The primary barrier is political. It simply requires a real commitment to transparency and fiscal discipline, a commitment that has to rise above short-term political thinking.
So, at the end of the day, the money to build Nepal's future is out there. That ocean of capital is waiting. The tools and the roadmap are all clear. The only question left is, will Nepal actually choose to build the bridge it needs to go and get it?